All right, let's just jump right in. When you pull up a financial chart, you probably think you're watching a big tug of war between human buyers and sellers, right? Well, the truth is, you're mostly just watching ghosts in the machine. Today, we are going to pull back the curtain on this invisible world of algorithmic trading that is quietly and completely running our modern markets. And just to give you a sense of the sheer scale we're talking about, look at this number. In the gigantic foreign exchange market, a study found that a mind-boggling 92% of trading was done by algorithms, not people, machines. This isn't some tiny niche corner of the market. This is the new normal.
So that leads to a pretty big question, doesn't it? If the overwhelming majority of trades aren't being placed by a person clicking a mouse, who or what is actually calling the shots? That's what we're here to figure out. We're going on a hunt for the machines.
Okay, so for our first section, we need to get a handle on just how widespread this machine takeover really is. Who are these hidden rulers, and where exactly do they operate?
And you can see right here that this isn't just a stock market thing. No way. It dominates everywhere. Now sure, equities make up the biggest slice at 45%, but you've got massive machine activity in foreign exchange, in derivatives, and yep, even in the crypto markets that never sleep. These algorithms are everywhere.
And this is absolutely a global game. North America is leading the pack with about 41% of the market, mostly thanks to its high-speed infrastructure. But you can see Europe and the Asia-Pacific regions are not far behind at all, with this kind of electronic trading just exploding everywhere. So the big takeaway here is this. It doesn't matter what you trade or where you trade it. You are sharing the market with machines. All right, so we figured out where they are. But what exactly is an algorithm? Let's, pop the hood and take a peek at how these things actually think. At its core, it's actually way simpler than it sounds. Algorithmic trading is really just using a computer program to automatically place trades based on a set of rules you give it. And those rules can be based on anything: time of day, a specific price, a sudden jump in volume. The key word is automated. It's all pre-programmed. And this table breaks down the 4 key parts that work together perfectly. First, you've got the data feed, which is like the eyes, just drinking in market info at the speed of light. Then, the decision engine acts as the brain, crunching that data based on its strategy. The execution module is the hands, placing the trade, often slicing it up into tiny pieces to be stealthy. And finally, you have a risk management layer, which is kind of like the kill switch, making sure things don't go haywire. It's a whole trading system in a box. So now that we have a basic idea of how they think, we get to the really powerful stuff: how to actually spot them. See, because these algos are based on rules, they become predictable. They leave behind these footprints all over the charts. And if you know what you're looking for, you can start to see the ghosts in the machine. First up, we've got one of the most common types you are going to see out there: the range-bound algo. Its whole strategy is dead simple. Find a price range, then automatically buy at the bottom and sell at the top, over and over and over again. And its footprints? They're unmistakable. The first clue is just unnaturally perfect support and resistance levels. I'm not talking about a general area. I mean, the price bounces off the exact same tick with surgical precision again and again. And every time it hits that magic number, you'll see consistent little pop in volume. That's the machine's orders kicking in. This quote from the Red Team Trading Community Analysis just says it all perfectly. Human trading is messy, it's emotional, it's approximate. Machine trading is precise, it's mathematical, and it's repetitive. So when you see a price level that looks a little too perfect, yeah, that's almost certainly a machine at work. All right, next up we have the complete opposite personality, the breakout algo. This machine could not care less about ranges. It is programmed to do one thing: detect when a price is smashing through a key level and then pile on that momentum instantly. And its footprint is way more dramatic. The number one clearest sign is a sudden, insane spike in volume. I'm talking 3 to 10 times the average at the exact moment a price level breaks. This usually creates a really clean, long candle on the chart because the algo just executes with zero hesitation. And this can create a wild domino effect, as one algo's breakout triggers a dozen others to jump in. So our third footprint belongs to the big guys, the institutional algorithms. See, when a huge pension fund or a bank needs to buy or sell a massive position, they can't just dump it on the market all at once. That would crash the price. Instead, they use these things called VWAP or TWAP algos to slice that giant order into thousands of tiny pieces and feed them into the market slowly all day long.
Now, the signature here is a lot more subtle. First, you might notice that the trading volume is artificially flat all day, which is weird, right? It's not spiky like it usually is. Second, the price just creeps. It's this slow, relentless, unwavering move in one direction. The red team report compared it to a glacier. And finally, you might see what are called iceberg orders, where a little order keeps popping up at the same price, hiding the massive order sitting just beneath the surface. So, now that we can spot these different machines, what does it all mean for the market as a whole? Well, it's a real double-edged sword. It brings both amazing efficiency and some pretty terrifying fragility. On the one hand, these algorithms are incredibly efficient. They add a ton of liquidity and they lower transaction costs, which, hey, that's good for everybody. That's the upside. But the danger is that their incredible speed and how connected they all are can amplify risk like crazy. When one machine goes off the rails, it can trigger a massive chain reaction, leading to these moments of extreme volatility we now call flash crashes. And the most infamous example of this was the flash crash back on May 6, 2010. A single, large, algorithm-driven sell order kicked off a feedback loop that caused major U.S. stock indexes to lose nearly 6% of their value and then gain it all back, all inside of a few minutes. It's the perfect example of how quickly these automated systems can just spiral out of control. So we've identified the machines, we understand the risks they bring, so what's the big takeaway? What do we actually do with this knowledge? Well, it's all about learning to read these new digital tea leaves to your own advantage.
Here's a super simple checklist you can start using today. First, always analyze the volume. Is it spiking like crazy or is it weirdly flat? Second, look for that surgical price precision. Are there levels that just seem a little too perfect to be human? And third, watch for repetition. Does the price action feel robotic and consistent? If you start looking for these three things, I promise the algos will start to pop right out at you.
And it really brings us to the single most important point of this whole explainer. Look, you are not going to beat these machines at their own game. You can't outspeed them. It's impossible. So the goal has to shift. Don't try to fight them. Learn to read them and trade alongside them.
This final quote just hammers that point home. The machines have speed, they have perfect discipline, but that also makes them predictable. And that predictability, that's their weakness. That is the one place where a thoughtful human trader still has a massive edge. But you know, all this leads to one final, fascinating question to think about for the future. As these systems get smarter and move from simple rules to actual artificial intelligence, will our human intuition, our ability to see the bigger picture, remain our greatest asset? Or, in a market that becomes even more machine-driven, could our messy, emotional human nature become our biggest liability? Definitely something to chew on.